All right, so today we're diving into something pretty interesting.
Oh, yeah.
Yeah, it's this list of the top 10 stocks to buy, hypothetically, if a certain someone gets back in the White House.
Interesting.
Yeah, so we're going to kind of look at this list and see what we can uncover. And, obviously no crystal ball here, right?
Of course not.
We can't predict the future, especially with politics in the
Oh,
market.
exactly.
But it's still a fascinating thought experiment, right?
Yeah.
So let's start with energy and natural resources.
Okay.
Which always seem to be, right at the center of these sorts of discussions.
Absolutely. And right at the top of the list here, we see ExxonMobil and ConocoPhillips.
Okay.
And the thinking here is that a return to energy dominance, which was something we heard quite a bit about during the previous administration, could potentially be very good for those companies.
So when we talk about energy dominance, what does that actually look like?
Well, during that previous term, we saw a number of environmental regulations rolled back, particularly ones related to oil and gas exploration and production. And that, of course, was aimed at boosting domestic energy production.
Right.
And, reducing our reliance on foreign sources.
So if we see a similar approach this time around, could that lead to, a surge in production and profits for companies like ExxonMobil?
Well, it's certainly possible.
I mean, their stock performance during that, previous term might give us some clues.
Yeah, we did see a positive response in their share prices, particularly in the early days of that administration, as investors kind of reacted to those policy shifts. But it's important to remember that the energy sector is influenced by a whole bunch of factors, right?
Of course, yeah.
Global demand, supply chains, technology,
Right, it's never a simple equation.
Right.
Okay, so moving on to the next sector on the list, we've got defense stocks.
Okay.
And that's always a hot topic, right?
Absolutely, especially when we're talking about potential shifts in foreign policy.
Exactly so.
And here we have Lockheed Martin and Raytheon Technologies.
Okay. That are standing out. And the reasoning behind that is that an administration prioritizing things like military modernization, expanding programs like the Space Force, and just generally taking a more assertive stance on the world stage that can lead to more defense spending.
Yeah.
And that, of course, means more business for those companies.
So let's say we do see a kind of a shift towards this, more hawkish foreign policy.
Sure.
What are the specific areas within defense spending that might see the biggest growth?
Well, the source material highlights a few key areas.
Okay.
One is missile defense systems, which, of course, both Lockheed Martin and Raytheon are very active in.
Right.
Another is cybersecurity,
Okay.
which is, obviously becoming more and more important.
Oh, yeah, of course.
Threats evolve. And then, there's the kind of ongoing development and modernization of, traditional weapon systems.
Right, the fighter jets and the submarines.
Exactly.
So, yeah, if we see that kind of a shift, that could be really good for these defense companies.
Potentially. But what about the risks?
Well, of course, there are always risks.
Sure.
One of the big ones is the potential for budget constraints.
Okay.
Even with a strong emphasis on defense, there's always competing priorities for government spending.
Yeah, that makes sense.
And, unforeseen economic challenges could lead to cuts in those budgets.
Right. So even if the, political will is there to do it, the money might not be there.
Exactly.
All right. So let's shift gears to infrastructure and manufacturing.
Okay.
Another sector that's always, front and center during elections.
Absolutely.
And the companies highlighted here are Nucor, Caterpillar, and Cleveland-Cliffs.
Okay.
And this is all tied to that Buy American, Hire American agenda, which we've heard, variations of for a long time.
Right.
And that often comes with, big investments in infrastructure projects.
Yeah.
Measures to protect domestic manufacturing.
Right.
And then incentives to, bring those manufacturing jobs back to the U.S. So I can definitely see how that narrative would get people excited about these companies.
Yeah.
More infrastructure projects means more demand for steel from companies like Nucor and Cleveland-Cliffs.
Right.
More construction means more demand for equipment from Caterpillar.
Right.
But how realistic is this Buy American vision?
Right.
I mean, what are the potential downsides?
Yeah. I mean, it's a very compelling idea, and, it definitely resonates with a lot of people.
Right.
But we have to acknowledge that global supply chains are very complex.
Oh, yeah, they're very complicated.
Right. The global economy is very interconnected. So there could be some unintended consequences.
Like what?
Well, what about the potential for increased costs? Right? If we're primarily sourcing materials and labor from within the U.S., And how might that impact our relationships with our trading partners around the world?
Right, so it's a trade-off potentially.
Right.
Between, boosting these domestic industries and keeping prices affordable for consumers. Okay, let's dive into another sector that's very closely tied to government policies, financials.
Okay.
And here Goldman Sachs is the one to watch.
Oh, right.
And the idea here is that a rollback of financial regulations could lead to a lot more profit for these big financial institutions.
Interesting.
Yeah, deregulation is always a hot-button issue.
It is.
Can you remind us what parts of financial regulation were targeted in that, previous administration?
Sure.
And how might those changes, if they were to reappear, impact, a giant like Goldman Sachs?
Well, during that previous term, there were efforts to ease regulations that had been put in place by Dodd-Frank, which was enacted after the 2008 financial crisis to, strengthen oversight of the financial industry and kind of reduce systemic risk.
So it was all about, preventing another meltdown.
Exactly. And the argument in favor of deregulation is that it reduces, compliance burdens, promotes innovation, fosters economic growth.
So less red tape, more freedom to operate, potentially higher profits.
Exactly.
But I'm guessing there's some downsides to consider as well.
Of course. I mean, we can't forget about 2008.
Right.
Which, serves as a pretty stark reminder of what can happen when you have very lax financial regulations.
Yeah, it was a pretty rough time.
Yeah, and while deregulation can stimulate economic activity, it can also increase the risk of excessive risk-taking, moral hazard, and ultimately financial instability.
So finding that balance between fostering innovation and preventing another collapse.
Yeah, it's a tough one.
Yeah, it's a tough one.
Yeah.
All right, so let's move on to a sector that's often linked to both infrastructure and manufacturing, mining.
Okay.
And here, Freeport-McMoRan is the company in the spotlight.
Right.
And the source material suggests that this emphasis on critical mineral security combined with potential deregulation of the mining industry. And increased infrastructure development could be really good for mining companies. Yeah, so the thinking is that if we're going to be ramping up domestic manufacturing in these big infrastructure projects, we're going to need a lot more raw materials, like copper.
Right.
Which Freeport-McMoRan produces. But what about the environmental impact of all that?
That's a great point.
I mean, mining operations can be pretty tough on the environment.
Absolutely.
So if we see this, resurgence in mining activity, it seems like it would be really important to make sure those environmental regulations are enforced.
Absolutely. And that mining companies are held accountable for operating in a way that's sustainable and responsible.
Yeah, because balancing that economic growth with protecting the environment is a big challenge.
Yeah, it is.
Especially with industries like mining.
It is.
Okay, so last but not least on our list, we have transportation and logistics.
All right.
Which is, essential for moving all these goods and materials around the country.
It is.
And the company they highlight here is Union Pacific.
Okay.
One of the biggest railroad companies in North America.
Right.
And the thinking is that increased freight volumes, driven by all these things we've been talking about, infrastructure investments, domestic manufacturing, energy production, all of that could lead to a boon for the railroad industry.
It could.
So if we see more domestic manufacturing, more construction, more energy production, all that stuff has to be transported.
It does.
And that's where Union Pacific comes in.
Exactly. Railroads are a critical part of the supply chain.
Yeah.
They connect producers and consumers across huge distances.
Right.
So, yeah, an increase in freight volume would be good for their business.
But we can't forget about the other trends that are shaping transportation and logistics.
Right.
What about, the rise of e-commerce and how complex global supply chains are getting?
Absolutely. Those are really important factors.
So how do those things, potentially impact Union Pacific's prospects?
Well, the rise of e-commerce has definitely led to a surge in demand for last mile delivery, which is more the domain of trucking companies and package delivery companies.
Right.
But, railroads still play a vital role in moving goods from ports to distribution centers.
Yeah.
Connecting major manufacturing hubs.
So it's a complicated ecosystem.
It is.
And even within, a sector like transportation, there could be winners and losers.
Right, depending on how these various trends play out.
Exactly. Now, before we get too carried away with all this potential upside, we do need to remember that the source material itself does include some caution about trying to predict market movements based solely on political outcomes.
Of course.
It's inherently risky.
It is.
It's like trying to predict the weather months in advance.
Right.
There are just so many variables at play.
Exactly.
So how do we make sense of all this information without getting lost in a sea of what-ifs?
That's where critical thinking comes in.
Okay.
Instead of taking these predictions as, gospel truth, use them as a starting point.
Yeah.
For your own research and your own analysis.
So it's not about just blindly following this list.
Right.
It's about understanding the logic behind it.
Exactly.
And doing our own homework.
Absolutely.
So dig deeper into those companies.
Yeah.
Understand their business models.
Yeah.
Analyze their financials. And think about how they might be affected by different economic and political scenarios.
Exactly. Look beyond the hype and focus on the fundamentals.
So be proactive, not reactive.
Yeah.
Make informed decisions.
Exactly. And politics is just one piece of the puzzle.
Right.
You've got global economic trends, you've got technological advancements,
right,
consumer behavior, geopolitical events.
All of that stuff.
All of that.
Yeah, well, it sounds like we've got a lot more to cover.
We do.
But for now, let's take a quick break and we'll come back and delve a little deeper into this fascinating deep dive.
Sounds good. It's funny how we tend to focus on, the potential upside and get excited about those hypothetical gains.
Absolutely. But we've got to balance that with some healthy skepticism, right? I mean, things can change quickly.
They can.
And relying just on, political predictions.
Right.
That's not a recipe for success.
No, it's not. And that's why the source material here emphasizes the risks, which is really important.
Yeah.
They highlight a number of risks inherent in trying to predict the market.
Based on politics.
Solely on political outcomes.
Yeah. So let's dive into those risks.
Okay.
What are some of the red flags that investors should be watching out for?
Well, at the top of the list is what they call policy implementation uncertainty.
Okay.
So even if a particular candidate wins and, certain policies are promised, there's no guarantee
it'll actually happen,
that those policies will be enacted.
Right. It's not just a flip of a switch.
Yeah.
So what are some of those hurdles that could derail or delay the implementation of these policies?
Well, you've got the legislative process. Even if you have a majority in Congress, passing legislation can be very, very complicated.
Yeah, it's a long road.
It is. There's a lot of room for amendments, compromises, even, outright opposition.
Yeah, so even if it seems like, the political winds are blowing in a certain direction, no guarantee that the market's going to follow.
Right. And even if the policies are implemented, it's still tough to predict their actual impact.
Yeah.
There's always a risk of unintended consequences or unforeseen external factors.
That could throw things off.
Absolutely.
So, for example, a policy aimed at boosting domestic manufacturing could end up raising costs for consumers.
It could.
And that could actually hurt demand.
Right.
And then ultimately hurt the very companies it was supposed to help.
Exactly. It's a very complex web of interconnected factors.
Yeah.
It's almost impossible to predict with certainty how each piece is going to move.
In response to these changes.
Right.
Okay, so we've got the legislative hurdles, the potential for unintended consequences.
Yeah.
What other risks should investors be hunking about?
Well, another big one is market volatility.
Okay.
Political events. Especially, big ones like a presidential election.
Yeah.
They can create a lot of uncertainty.
Right.
And that leads to bigger price swings.
Right. We often see, heightened volatility leading up to an election.
We do.
As investors are trying to figure out, what's going to happen.
Exactly. They're trying to anticipate the impact of different outcomes.
Right.
And this volatility, of course, creates opportunities for both gains and losses.
Of course.
So investors who are overexposed to certain sectors that are seen as being particularly sensitive to those political shifts could experience significant losses.
If things don't go their way.
If the market moves against their expectations.
So it's all about managing those expectations.
Right.
Diversifying our portfolios.
Absolutely.
Not putting all our eggs in one basket.
Diversification is key to mitigating risk.
Okay.
Spread your investments across different sectors, different asset classes, even geographic regions.
Yeah.
That can help cushion the blow if one area underperforms.
And remember, folks, this is not about, trying to time the market or make quick bets based on short-term political events.
It's about taking a long-term informed approach.
Informed approach to investing.
Yes.
So building that resilient portfolio that aligns with your goals, your risk tolerance.
Yeah.
That's essential for navigating these uncertain times.
It is.
Okay, so beyond the specific risks in the source material, what are some of those broader economic things that investors should be considering?
That's a great question.
As we navigate this potentially, turbulent political landscape.
Well, we've got changes in tax policy,
okay,
trade policy, regulatory frameworks.
Yeah.
All of these things can have ripple effects throughout the economy,
right,
impacting different sectors in different ways.
Can you give us some examples of how those broader economic shifts might play out?
Sure. Let's consider tax policy.
Okay.
Changes to corporate tax rates, individual income tax rates, capital gains taxes. All of those can have a big impact on corporate profits.
Right.
Consumer spending, investment decisions.
So, for example, a reduction in corporate tax rates
could boost corporate profits.
Okay.
Which could lead to higher stock prices.
It could also lead to bigger budget deficits.
Right, which could have other economic consequences.
Down the road.
Exactly.
So it's not always a simple, cause and effect.
No, it's not.
There are trade-offs and unintended consequences.
Absolutely.
That we have to consider.
Yeah, it's about understanding how all these different economic factors
right.
might interact with each other.
Right. And what about trade policy?
Sure.
We touched on the potential impact of protectionist measures.
Yeah.
But how might shifts in global trade patterns influence the overall economic outlook?
Well, global trade is a major driver of economic growth. And, changes in trade policies or the emergence of trade wars can have a huge impact
on businesses and consumers.
Absolutely.
So, for example, tariffs on imported goods
can lead to higher prices for consumers,
which can dampen demand and slow down the economy.
But they can also create opportunities
of domestic industries.
Exactly, to compete more effectively.
So there are potential winners and losers.
Absolutely.
Depending on how these policies are implemented.
Right.
And how global trade patterns evolve.
It's a complex balancing act.
It is. So what does all this mean for the average investor who's trying to make sense of this whole, complicated and potentially volatile situation?
It means that staying informed, being adaptable, maintaining a long-term perspective, those are more important than ever.
So don't try to time the market.
Right.
Don't make impulsive decisions based on, short-term political events.
Exactly.
So tune out the noise.
Yes.
Focus on the fundamentals.
Focus on building a diversified portfolio that aligns with your goals and your risk tolerance.
Yeah.
And don't be afraid to seek out expert advice.
Right. This isn't a solo mission.
It's not.
There are resources out there to help.
There are financial advisors, investment professionals, reputable financial news sources. All of those can provide valuable insights and guidance.
All right. So we've talked about the potential opportunities, the risks, the importance of taking that, long-term informed approach.
Right.
But before we wrap up.
Yeah.
What stands out to you as the most important takeaway from all of this?
I think the most important thing is critical thinking. And independent research.
So don't just blindly follow lists.
No.
Don't get caught up in the hype.
Right. Take the time to understand the factors that are driving these predictions. Make your own informed decision.
Based on your own goals.
Based on your individual goals and risk tolerance.
I love that. Take ownership of your financial future.
Exactly.
Don't just react to the headlines.
Right.
Now let's move on to our final thoughts.
Okay.
So we've gone through these potential stock picks, looked at the political and economic forces that could be at play. But let's get practical here. If you were going to, build an investment strategy based on all this, what sectors or ideas would you be most interested in exploring further?
That's a great question. I think what's really interesting is that some trends are likely to shape the investment landscape no matter what happens politically.
Okay, I like that. Can you give us some examples of those, those enduring trends?
Sure. Let's take the energy sector, for instance. The shift towards cleaner energy that's happening globally.
It is.
Driven by, environmental concerns and technological advancements.
Yeah.
So even if we see, maybe a short-term bump in traditional energy sources, that momentum behind renewables, that's not going away.
So instead of getting caught up in the, the short-term political stuff, a smart investor would be looking at the bigger picture.
Yeah.
And thinking about that long-term energy transition.
Absolutely. And that applies to other sectors as well.
Okay.
Think about things like automation, artificial intelligence.
Right.
Big data. These technological forces are changing everything.
Yeah, it's like a tech revolution happening right in front of us.
It is, and understanding how those trends are going to reshape industries.
Yeah.
That's crucial for making good investment decisions.
Absolutely. And of course, we can't forget about the global context.
Right.
Geopolitical events, emerging markets, international trade patterns.
All of that plays a role.
So it's not just about understanding what's happening here in the U.S.
No.
But also having that global perspective.
Exactly. Recognizing that the world economy is interconnected.
It really is. It's amazing how, this deep dive started with just a list of stocks.
Yeah.
And now we've uncovered this whole universe of, trends and factors to consider.
And that's what makes it so interesting, right?
It does.
It's not about, having some magic formula or predicting the future perfectly.
Right.
It's about understanding the forces that are at work, asking the right questions.
Yeah.
And making informed decisions that align with, your own goals and values.
Couldn't have said it better myself.
Yeah.
So as we wrap up this deep dive,
yeah,
what's the one key takeaway you want our listeners to remember?
Don't be a passive observer in your own financial journey. Stay curious, stay informed, stay engaged. The more you understand about the market and the things that drive it, the better equipped you'll be to navigate all the complexities and take advantage of the opportunities that are out there.
Well said, so. Until next time, keep learning, keep questioning, and keep diving deep.